Hi everyone, today we talk about Wallgreen stock, which is one of my stocks I currently hold in my portfolio, and he reported earnings earlier today. And Wallgreens is probably one of the first companies in my portfolio that are going to report earnings, and then we're going to have quite a busy kind of July over the next kind of few weeks, where we're going to have a lot of companies reporting earnings, and a lot of my companies that are in my portfolio that are reporting earnings, and that's where we probably see quite a few moves. Might have some stocks going up, some going down. Maybe some times where some stocks might be at a good point to sell. Maybe some stocks will be at a good time to buy. So I think over the next kind of few weeks we'll see a lot of news, a lot of stocks moving, and it could create a good opportunity to get in some of these stocks. And also it could potentially move the market down or up. If we have a strong earnings, we could see the S&P 500 now push to new heights, so it's going to be really interesting. But to start off with, it was Wallgreens that reported earnings today. Wallgreens really is one of my stocks that isn't in a major position, but Wallgreens and Carnival Corp are two very similar stocks in my portfolio. And the reason why they're very similar is because I got into them stocks because I was basically looking for a bit more of a dividend play to try and hold for a few years. And I was looking for stocks that were quite beaten down on a massive discount, and companies that are a great brand, still have strong or still growing, not companies that are at a negative sales and EPS growth, and companies that I thought that could still carry on growing that dividend going forward. And with them being so cheap, I thought that there's potential, that they're in a bit of a sticky patch. There's a reason why they're cheap, but hopefully the company or the management will turn it around in the next 2-3 years, and the stock price will go up, as well as collecting them dividends, because I feel like I've kind of neglected dividends over the last kind of few years. I feel like my portfolio as a whole hasn't been as good diversified as what it could be. I feel like I've gone for a lot of tech stocks and not really gone for anything else. So I kind of wanted to go and diversify a little bit more and collect a few dividends, and that's pretty much why I got into Wallgreens in the first place. So we're going to look through the earnings now, and I'm going to make a few points while talking about these earnings, and then at the end I'll tell you what I'm kind of thinking about my Wallgreens stock going further forward. Wallgreens post quarterly earnings beat as prescription drug sales rise, and this is obviously something that's been talked about quite a bit, as well as profit margins not being amazing, and is pretty much why the stock's down quite a bit. Wallgreens posted adjusted earnings of 147 per share and sales of 34.5 billion. Analysts were expecting 1.343 per share, so we had a little bit of a beat on the earnings per share there. And 34.46 billion in revenue, so we had a couple of million there beat on the revenue as well, which is really good, because I thought, to be honest with you, the revenue was something that we could potentially miss out on. Higher prescription drug sales helped the company regain its footing after CEO Stefano Pisana dubbed last quarter the most difficult since the company was formed. I think he's referring to 2014, since Wallgreens turned into Wallgreens Boot Alliance, where they merged with Boots. And because of pretty much all this news, the stock was up 5%, and I think that also helped CVS Corp go up. They went up on the day as well. I think a few people kind of going, oh well, if Wallgreens gone up, then probably CVS Corp's going to go up as well. So I think a couple of day traders were just gambling on that a little bit. Obviously they're down absolutely massive. The company shares were up 4% after selling down 21%. So it has been a rough year for them. This was a quote actually from Pisana. After what was a very disappointing second quarter for us, it is pleasing to be able to report that this quarter has been brought in line with our expectations. To be honest with you, I don't think I could have took another guidance cut. It would have been horrible. Pisana said Thursday on a call with analysts that said the pressures we have seen for some time continues to impact our business. Obviously, what the problems they have aren't going to turn around straight away, and we still have a lot to do to develop the transformation and data to get ahead of the market trends and return our company to strong and consistent growth. Now, with that statement, this is why I really like Wallgreens, and it's one of the reasons why I chose Wallgreens over CVS. A few people asked me why I chose Wallgreens over CVS, and I did look at both companies, and I do like both companies. I think both were a good opportunity to buy, but for me, the management on Wallgreens is super, because they do realise that they need to improve, and they're trying to act on improving them, and that's one reason why I really like management. They're not kind of sitting going, oh, you know what, we're just going to continue, we're going to go on this downhill and just let it go and see what happens. They are trying to kind of remodel the business and sort everything out. And that's kind of my point about dividend investing. You know, I want to be in a company that's going to safely increase that dividend. And if the management are going to try improve the sales and get them sales going back up, then obviously that's going to make the dividends quite a lot safer. And when I looked into the insider shares of Wallgreens, there's a lot more insiders in the company that are holding shares of Wallgreens. I can't remember exactly the numbers. I've got a feeling it was more to like the 30-40% range, and maybe even higher. And when I looked in CVS Corp, it was like less than 10%. And that kind of suggests that if people are kind of holding shares in the company that are inside the company, they kind of think, you know, we're okay here. You know, if I put my money into the shares of the company, you know, we're safe here, and I'm going to make money. With the insiders on CVS Health Corp going not really holding that many shares, kind of says, you know, maybe it could be quite worrying for the company. So that's also something that I considered when I was investing into Wallgreens. Chief Financial Officer James Kehoe, I think I said that right, told analysts the decrease in profits was mostly due to lower pharmacy margins, which I mentioned at the start of the video, weakness in the UK, which I'll just talk about in a second, drugstore businesses and declines in front store sales in the US, insurers under pressure to lower prescription drugs costs are paying pharmacies less to fill prescriptions. So obviously, you know, the kind of pharmacy side of it always goes in cycles, and at the moment we have a little bit of a trend where margins are under pressure, and I think at some point, you know, that will kind of naturally sort itself out. It's just a natural cycle that happens. Amid ongoing challenges in the UK business, Wallgreens will close about 200 Boots drugstores in the UK. Kehoe said the company is also reviewing its US real estate footprint, he added. So I knew this was coming for a while, that basically Boots is the UK version of Wallgreens, and one of the reasons why I did invest into Wallgreens at the time is because Boots is in the UK, and I like to invest into companies that I know, and I can kind of know how it's going on because I use them, or I have some interaction with them. And with Wallgreens kind of being in the UK because it owns the Boots stores, and with CVS kind of not really being in the UK at all. It's mostly like US based compared to Wallgreens, which is kind of more worldwide. I kind of can see what's going on, and I knew that Boots had to kind of restructure their model, because a lot of the stores that were open were in locations that were just absolutely stupid, and they needed closing down. So to be honest with you, the 200 store closures will affect the revenue going forward, and it will take a few years to recover from that. And it looks like they could kind of consider right now, you know, some of the locations they have in the US, because it might be similar in the US. But it seems like a smart move to me, to be honest with you. And it also said that it increased sales 0.7% from a year earlier, or 2.9% after accounting for fluctuations in currency rates, which is mentioned before that currency rates has actually affected the company. We also had mentioned that it's also trying to work with a few more partners to increase sales, but I think really the point is now that Wallgreens has got to the point where it's clicked and gone, right, we kind of have to stop having these storefronts and think they're going to make us the money. They're trying to look at other ways to make the money. Online is definitely one way they need to increase making the money, you know, that's where potentially a lot of the, you know, the online delivery, prescriptions getting delivered all the time, that's where they need to go. And storefronts, like everything really, is kind of just getting faded out, and that's how Wallgreens are adapting to it right now. So the earnings report wasn't too bad overall. You know, when we talk about Wallgreens, it's still a dead cheap company, only 11 PE, and, you know, a historic low quite PE really. Obviously I got in for the dividend, and that's a 3.2% yield. And obviously the EPS and sales side are negative, which is the main thing. Obviously I'd like EPS to go more to the 5% and sales more to the 5%, but it might be a year, 2 years before we see that after kind of Wallgreens remodels itself. But right now I was really happy with them earnings. I was kind of expecting more of a revenue miss, potentially a guidance cut, and we didn't have that. So overall the earnings were pretty good. Going forward with Wallgreens, you know, I have no plans to sell my stock. It's a stock that I'm kind of looking at holding for probably 3 to 4 years, which I don't often say on this channel that I'm holding it that long, but that's what I'm kind of looking at. And while it's at these prices or it's lower, I might add into the position. To be honest with you, Carnival is looking a little bit of a better discount to me right now. But better than that, I'd rather probably look at Visa and Alibaba, because I believe they probably have the best returns over the next kind of 3 to 5 years, and they're dead cheap right now. So I have really no plans to change my Wallgreens position at all, because I'm kind of looking at more other stocks, but at the same time I'm not going to sell. But I was quite happy with those earnings overall. So yeah, that's me talking about Wallgreens earnings today, guys. Obviously, if you track the stock or CVS Health Corp, it might be helpful to you. If you could give the video a like, that'd be amazing. Subscribe. Thanks for all the support recently. We've just passed 300 subscribers, which is amazing, so thank you so much. It's scary to think we're nearly going to the 400 mark now, so I'm honestly so happy about that, so thank you so much, and I'll see you on the next video.